Okay, so this is the fourth attempt at filming this video. First of all, my camera died, then the mic died. I don't know if it died or it just stopped working. Then Juno woke up from sleep and decided to start playing, but now we're here, so it's all good. So a few weeks ago, I told you guys that I was going to start a series of videos about things that I wish I got taught at school. I did one on how to be productive, and this video is going to be about tax. Some people understand tax, some people don't. If you don't understand it, this video is probably for you. If you do understand it, then you're probably going to think that I sound really silly and a bit condescending, and I'm sorry if I do. Maybe this video isn't for you. I'd just like to do a little disclaimer for this video. This is about what I do, not necessarily what's best for you. It's like talking to my younger self, basically. If you want to own your own company and you want to pay yourself as an employee, and then you can be a director and you can split shares and things like that, this isn't for you. I literally pay myself as an individual. Money comes into my account from companies for different jobs that I've invoiced them for, and I pay tax on that money that comes into my bank account. So if you're a bit confused about how this video is going to work, I'm literally going to be talking to you as if you're my younger self. I'm going to talk to you as if you're self-employed and you don't know how to pay tax. So yeah, I think that's the best way to do it, I think. First of all, self-employed. What does self-employed mean? What's a sole trader, etc., etc.? Basically, it means that you don't work for a company, you don't get paid a specific wage. I don't get a pay slip. I don't work for a company that puts some money in a pension for me. I don't really get any benefits from anyone necessarily, but I have a really cool job because I'm like a YouTuber, content creator. If you work for a company and you're not self-employed and you get a pay slip each month, basically they pay tax for you. They just deduct it from the amount that you earn each month before it comes into your bank account, so you don't need to worry about it. So the money comes out of the business, money goes to HMRC for tax, and then the rest of the money goes in your bank account, and you don't need to stress, you don't need to worry. If you're self-employed, then it's down to you to do that role. When the money comes into your bank account, it's down to you to work out how much tax you need to pay. It's down to you to keep that money aside so that at the end of the year, you pay your tax bill. So basically, if you're self-employed, but you're not paying tax yet, you go onto the HMRC website, you sign up as a sole trader, that's what I did, and then you keep your accounts up to date, you sort out your tax, and then at the end of the financial year, you fill in a little document, they tell you how much tax you need to pay, you pay that tax, bam, done. Probably the first thing you need to know if you're a newbie is that there's a financial year. If you don't know that, then a financial year is a bit different to how we work out years in the world. Usually we do it January to January, right? Happy New Year and all that. But a financial year is so April 2017 to April 2018. That is how self-employed people work out how much money they've earned. What you've earned from the April to April, that is your yearly wage. Probably the first thing to do once you've signed up to be self-employed is to create a separate bank account, which is what you'll be paying your tax into. So it's like you're paying tax to HMRC every month, except you don't do that. You put it all in that account, and then at the end of the year, you pay a big bill at the end. It's the best way that's worked out for me. I don't look at that bank account. I literally just, every time I get paid, I literally just move some money into that account. And then at the end of the year, I always have enough money in that account to cover my tax. So to work out how much money you have to put into that tax account is a little bit tricky. And I'm going to read it off a piece of paper because there's different brackets of money, and within those you pay different amounts of tax, and I don't want to get them wrong. And they've changed this year. So this isn't just for self-employed people, this works for everyone's wages. It's just that we need to work it out because we're self-employed rather than your employee working it out if you are employed. So if you earn up to £11,850, you pay zero tax on that. If you earn £11,850 to £46,350, you pay 20% tax. Then if you earn 46 grand, 350 to 150,000, you pay 40% tax. And then anything over 150 grand, you pay 45% tax. If you earn, let's say, £40,000, right, and you're in the bracket within paying 20%, you still get the money up to 11,000 free of tax. You just pay the tax on the bit over that, if that makes sense, and so on and so on. I hope that makes sense. So let's say in the past year you earned £24,000. On the first 11,850, you'd pay no tax, and then on the rest of it, to the 24,000, can't do the maths in my head right now because there's someone walking past my house and they're putting me off. On the rest of that, you would pay 20%. When I first started, I had no idea, but I knew that I wasn't going to be earning more than 46,000. So basically, I knew I wasn't going to be paying more than 20% on everything that I earned for tax. So, but I could have been earning only 11,000 and not having to pay any tax because you get 0% on that. So I basically just put 20% in a separate bank account whenever I got paid, just in case I earned more than 11,000. So I always had enough money for tax. At the end of the day, if you're putting more than you really will have to pay into that bank account, then just when it comes to paying your tax, you'll have a little bit extra in there and you've just saved some money. It's like being like a savings account as well, and then you can go on holiday or something. So there's a lot of reasons why you should be paying your tax. I'm not going to go into telling you like a parent that is against the law, or you're breaking the law, or it's wrong for your country, or you're not going to get your state pension if you don't pay your national insurance, which you pay when you pay your tax and things like that. Oh my God, there's a fly and it's really annoying me. Go away. But at some point, as a self-employed person, you're probably going to want to buy a property, like me. And when you go to buy a property, you're going to need to get a mortgage. And when you go to get a mortgage and you're self-employed, it's a little bit harder than if you're employed by a company. If you're employed by a company, you just show them a few pay slips, and then they work out how much money you can get from that for your mortgage. If you're self-employed, you have to show them like 3 tax return summaries from HMRC. So you have to have paid tax through HMRC. Well, obviously through HMRC, you can't pay it from anywhere else, but you have to pay tax for 3 years and have the summaries before you can get a mortgage. So at least do it to be selfish if you're not doing it for any other reason, but also do it because you could get in trouble. If you don't pay tax and you're meant to be paying it, then HMRC could find you in a few years' time and be like, by the way, you owe us for the past 5 years, and you probably haven't kept that money in a bank account, and you'll probably be in a lot of trouble. So if you do what I do, and every time you get paid from a company for an individual job, because you're self-employed, the money goes into your bank account, and you put 20% away in your tax account, and then you keep a record, keep a spreadsheet. I just do it on like Google Docs. Keep a spreadsheet every time you get paid. And then what I do is I literally just tally all that up at the end of the year, and then it will tell me how much money I've earned. And then when you go onto HMRC, you literally just you sign in, it tells you your tax return is due, you type in the amount you've earned, and then it will tell you how much tax you owe and how much national insurance you owe. National insurance, by the way, is a very small amount, which is why I'm not doing this video on that, but I'll leave the link down below. I can't actually remember the exact figures, but that goes towards like your state pension and things like that. So you're on HMRC, you know it's time to fill in your tax return, you've typed in how much money you've earned because you've worked it out in your spreadsheet as an annual amount, and then they've told you how much tax you owe. Hopefully you put enough money in your tax account to cover that, probably more than enough. So then what happens is that they'll ask you if you've got any expenses to deduct. So basically you now get an opportunity to deduct any money from that amount that you're about to pay tax on things like a camera, if you're a photographer, a camera, because if you worked for a company, they would provide things like laptops and cameras and stuff, but if you're self-employed, you have to provide them yourself. So you're allowed to deduct that amount, only if you've like bought it within that tax year, and you have to keep a receipt as proof of purchase as well. So let's say you earned 25 grand and you bought a camera that year. You would write in the expenses, I'm going to deduct 2 grand because that's how much the camera cost. You have to keep that receipt, so you've got the receipt of purchase. It will then say, oh, okay, fair enough, we've deducted that amount, and you now only have to pay tax on £23,000 instead of £25,000. Bam, that's great, perfect. You have to pay less tax, makes sense because you had to buy the camera for your job. And it's a win-win. Just make sure you keep your receipt and make sure that you only expense things that you actually need for your job. Like, I wouldn't expense this white Fred Perry t-shirt because I don't need it for my job, but I would expense the camera that I'm talking to right now because I do need that for this job. So now HMRC will work out after the expenses how much you owe them, you'll pay your taxes, and all is great. You just need to make sure now you keep the record of all of this stuff, your receipts, your spreadsheet, the proof of how much tax you've paid that HMRC will give you, which is like your tax return. You need to keep all of that stuff for 5 years, which seems like a long time, but it will go quite quickly. It's basically just so that you have proof that you've paid your taxes. HMRC might look through it at some point, and they might say you haven't paid your taxes, you need to prove you have, or they might say that you owe them money and you need to prove that you don't owe the money, just things like that. So make sure you keep copies of it. And they say you have to keep your accounts for 5 years. Yeah, hopefully this is a straightforward video. Hopefully I've mentioned everything I can think of. Okay, so I missed something out. I haven't mentioned national insurance very much at all in this video. That is because I'm planning to do another video on it at some point if you'd like that. That just seems like a very long thing to bring up within this video. But that is also money that you have to pay when you're doing your taxes. Please keep that in mind. Please read about that. I can do a video on that if you'd like that too. I'm probably missed something out. I'm not sure this was as concise as I wanted this video to be, but hopefully you found it interesting. If you have any questions, please pop them down below. As I said, this is just how I do my accounts. I do it on the cash basis method, by the way, not traditional. Just suddenly thought I'd mention that. When you get to choose an option, I do it on the cash basis method, which basically means that I pay tax on anything that comes into my bank account and is paid to me. Lots of companies and limited companies and things like that do it on the traditional method, which means that you pay tax on anything you've invoiced out and that's what you count. I do it on, it just makes sense to me to do it on the money that comes into my bank account because I'm just paying as an individual. Yeah, so hopefully that made sense. Gosh, I hope it made sense. It's actually more simple than you realise. I promise you, once you do some reading on the links down below, it will make more sense, hopefully. I put loads of information down there. And that's where I've got my facts and figures from and stuff. If you need any help, please message me. I'm always willing to help you on tax and things because I needed people to help me when I was trying to sort it out. Thank you very much for watching, guys, and I will see you soon.